Rashesh, thank you so much for taking the time out and joining in. Now, we've given a bit of a brief setup as to what could come out and what are the factors to watch out for when it comes to the economic survey. What are you hoping to hear?
I think that the most important thing is the outlook on growth, because I think this is a year growth has started to creep back. We saw in the last quarter that GDP growth has started to come back. And I think all indicators show that on the ground, at the micro level, there is a fair amount of activity pickup that has happened. Of course, we have some headwinds in terms of oil price, and we have to see obviously what is the view on maintaining the fiscal consolidation path. But outside of that, I would say what are their assumptions around growth and what is the outlook on growth, because the global economy is fairly benign. So I think exports should give a boost to Indian growth. And as I said, the Indian activity, especially in the consumer sector, auto sector, even housing has had a very good quarter. So we think growth is picking up, but it will be good to get a reinforcement from the economic survey.
I think, so, you know, in the mid-year survey as well, Rashesh, when they had spoken about these growth numbers, they had mentioned that when the real growth in investment, 4.5%, exports volumes aren't exactly buzzing, and there is a decline in credit to GDP ratio. In any of the last 25 years, if you go to look at it, we never had a growth of above 7%. Now that's turned out to be true for FY18. Are there any of the factors meaningfully changing aside the one that you said, which could lead the eco survey to also project what the global bodies are saying, that 2018 may be a year of 7.5% odd?
Yeah, and if we get 7.5 and say inflation remains at about 5, then you will get a nominal growth of about 12.5. And actually from government, the fiscal point of view, nominal growth is more important than real growth. So if we get anywhere between 12 to 13% nominal growth, we've been averaging 11% for the last few years. So I'm hoping that if we get 12.5, then government's ability to maintain the fiscal consolidation path, but as well as spend, because this year government will have to still spend money, because we see that the private capex is still going to take some more time to pick up. And I think so government investment, government spending is going to be a huge driver on this. And I'm also, the other thing I'm interested to look at is what they say about the non-tax revenue. Because what we have, over the years, we all focus on the tax revenue, indirect taxes, which is now actually outside the budget because it goes under the GST Council. But the entire strategy around direct taxes, whether long-term capital will come, estate duties will come, all those conversations are there. But I think what is even equally important is how they raise the non-tax revenue, disinvestment, asset monetization, all of that. Indian government is actually a fairly asset-rich government as compared to other governments in the world in emerging markets. Indian government has a lot of assets, and I believe that the time has come for us to start using the assets in terms of non-tax revenue in a very coherent and strategic manner.
I don't know. The question I would put when you say asset rich is all great, but we've had very little to believe that they have the gumption to go ahead and do the big divestitures that they need to. And I know that Air India is on the block. And I know that they've picked probably the most complex asset out there to, sort of make a point. But when you sell HPCL to ONGC, Rashesh, you got to think, right? I mean, that's not asset divestiture. That's just finding a way to unlock money sitting on balance sheets of PSUs. So,
absolutely. And I think government has been very hesitant and diffident because of the past historic baggage and everything else. The entire Soot Boot Ki Sarkar has been a big overhang on the government's ability to really go all in terms of reforms like this. But outside of this, we are seeing, I think parts of this are already happening. So if you look at, Piyush Goyal talking about saying, I don't need budgetary support because I've got assets, because railways owns a lot of land. If you look at, Nitin Gadkari also saying, I don't need money, I've got enough assets. So I think individual ministries, so there might not be a very holistic program, but individual ministries will start using the assets they have. So it doesn't have to be only, divestiture. It can be, the real estate monetization. Indian government owns a lot of land. So even developing the land, even developing it through PSU entities. You don't have to only use the private sector entities, but converting assets into income. I always give this analogy that you own a lot of land and you need to send your kids to college and you need to spend money on that. I think it is worthwhile to send some of the land, raise the money and use that for your college education for your kids. And I think India is at the same stage.
Yeah, well, Rajesh Jain, who helped advise Prime Minister Modi's campaign in 2014, has, I think, put out there a thought process of how do you aggregate all the government land, the central government land, and find a way to monetize it. These are really difficult things to do, and I wonder why we aren't doing some of the lower hanging fruit first. But you got to give them some credit for the fact that they have at least exceeded, I think, or close to exceeding their divestment targets for this year. So
they've always remember, this is a government that did, demonetization. That is as difficult as it can get. So if you can, I think this government knows how to do difficult things. They're thinking about Air India, and I mean, you see how easily we all accepted that Air India divestment is now, on the cards. So this government can do difficult things. I think if there has been one government that can take hard decisions and implement them, so I'm hoping that they will follow through on this.
What is the hardest decision? Let me put you on the spot. What is the hardest decision you think they should take in this year?
I think the hardest will be whether to maintain the fiscal consolidation path or allow that to slip a little bit. I personally think up to 3.5 is okay. I don't think we need to get to 3 given the year where we are. And remember, there is a strong headwind in terms of oil price. Whatever we say, oil price impacts current account deficit, oil price impacts government fiscal, spending ability. Given that, I think going up to 3.5 in the year like this and just maintaining the investment push, the spending push is going to be very important.
You don't think it dents our credibility, Rashesh? I mean, I get the point that it's the second decimal, etc. But as I think Subir Gokran had told Praveen Chakravarti in a conversation, I think he made a very valid point that when you set a rule, you have to be very careful under what circumstances you're willing to breach that rule. The more often or more easily you breach the rule, the less your credibility in the global markets.
Absolutely, and this government actually has actually maintained credibility. We have seen last 3-4 years, they have maintained the path to fiscal consolidation, but there are headwinds, and it's not that you are going from 3.2 to 5. If you're going from 3.2 to 3.5 and in that range, between 3 to 3.5, I think the world investors largely should be indifferent. There might be a short-term, shock to some people, but oh my God, credibility will get affected. But I personally don't think in this range, there is a real risk of credibility.
The bond vigilantes won't be up in arms and throw things.
It will always be there. I think a 3.5 equity investors will be very happy.
I'm sure.
Yeah.
But the bond investors will not be.
Sure. I just wanted to add to that. I don't think that there is that much concern, at least based on all the conversations I've heard in the last week, on whether we go from 3.2 to 3.5. I think the concern and the interest is on how do we do that. Are we doing that through things like a corporate tax rate cut? Are we doing that through things like an investment in rural? So it's, I think, where we're giving away that 0.3% is what people will be watching very closely, more than the fact that we're giving away 0.3%. Sorry.
No, that was the only point. I was just trying to wonder if bond markets are already pricing in a 3.5, looking at the things, because equity markets certainly are.
They're pricing in 3.2. They're willing to take 3.2 for next year.
Yeah, 3.2 for the next year. For the current year, at 3.5, I would think bond markets are
current year is taken out.
Yeah,
so for next year, I think they're okay with 3.2.
Yeah, so if 3.2 is the number, then I think...
Yeah, we're talking about 3.2 for next year. You're talking about FY19.
FY19.
Yeah, this year's 3.5, I think, is taken for granted now, right?
3.4, 3.5.
So if actually, in fact, the government comes in at below 3.5 this year, that'll be a good surprise for the bond market, won't it? Yeah.
And actually, if you see, the bond market is already ahead of the curve. And if the bond market is not looking at government fiscal as the main parameter, they are looking at oil price, they are looking at an uptick in inflation, they are looking at RBI stance on inflation and the MPC, what they are expected to do. So I think the bond market has already factored in all this. It's already done. The bond yields have gone up by almost 80-90 basis points. And so this has got priced in already. And I think hence it is easier for the government to be a little bit flexible on that and not be very hard-nosed about it, because if it comes at the cost of growth, then it's not really worth it.
Sure. Rashesh, tell me about the growth side. I mean, what do you think, the priority should be? Rural has been talked about a lot, rural roads, affordable housing, etc. Because they do have to address that jobs issue we were talking about. I don't know how many people take that 7 million number at face value, but...
I think so. But if you see the history of India, jobs has been an important factor, but not the most important factor when it comes to elections. If you look at elections, they are fought on corruption, they are fought on inflation. I mean, you go back to Bofors, you go back to 2014. the larger one, because ultimately jobs affect about 8-10 million people, while I think corruption, inflation has a much larger audience. So I think we should keep that in mind. This second thing we should always keep in mind, I mean, I'm all for jobs. I think jobs is one of the biggest problems we need to crack. It's not an easy one to crack, but we need to crack that. But I don't think it's such a major issue, especially in view of the elections coming up a year down the line. The other second one is there is always this difference between jobs and employment, because for some reason or the other, India, there is a lot of self-employment also getting created. And so are we measuring jobs or are we measuring employment is one of the larger questions we have to grapple with, because a lot of people who are self-employed, and with the new gig economy underway, where they are Ola drivers and all of that, it's very hard to really figure out where we are on jobs and where we are on employment. And I think our jobs data, our employment data, both of them are fairly broken. So unless we get clear data, we'll have to depend on anecdotal stories and all. I do think the issue is a real concern, but I think the larger concern will continue to be issues like inflation, corruption, growth, investments, all of that, because they affect a much larger constituent. They will affect 300, 400, 500 million people, while jobs will affect 8-10 million people.
Yeah. I've come back to the pakoda economy debate. I don't know. It took me like 24 hours to try and understand what is going on and why so many people on social media are talking about pakodas and frying and selling them. But
that's the gig economy.
Yeah, that's the gig. And just to, if you had to choose between a corporate tax rate cut, which is something that Finance Minister Arun Jaitley had promised right, off the bat when this government took over, and is still pending for large corporates, or let's say, we're breaching the fiscal deficit targets, but that's because we're spending more in rural India. Which one would you pick?
I would pick the corporate tax cut, because it's a promise that has been given, but more importantly, if you look at what has happened in the US, with the US tax reforms, and US has cut corporate tax rates in a fairly significant way, we expect it will be followed through by other countries, because I think everybody will have to ultimately match, because it's a very connected global economy. So given that, we being at 30 and 30 going down to 25 is on the, I think it is something we have to do. It will obviously not be a complete giveaway by the government, because some concessions which are currently underway will also go away. So when you add up the whole thing, what the government will give away will not be very large. And if that gap for the government comes from an increased fiscal deficit, I think it's a good trade-off to make. It is a worthwhile trade-off to make, because it will be growth-oriented, and we think corporate, investments, capex is about a couple of quarters away. So a cut like this will also give spur to the animal spirits. We are seeing animal spirits are starting to come back. If you look at the kind of action on the NCLT cases, we are seeing a lot of those cases. We are seeing 4 bidders and 5 bidders, and people are willing to pay a full price. Earlier, the apprehension was that people will try and pay, very distressed price or liquidation value prices. We are seeing full prices coming in for steel assets and cement assets and power assets. So the animal spirits are just getting unlocked. I think the economy is on an uptick. We have absorbed the demonetization, GST disruption. It is starting to come back. At this time, a cut in the tax rate, even if from 30 you don't go to 25, but you go to 27.5, I think it will be a big boost.
Can I argue that a bit? I'm just wondering, what we saw happen in the US, and rarely have we seen India or Indian companies do this. You saw immediately companies give out these $1,000 bonuses, and a large clutch of them to their workers, effectively passing on the benefit of a lower tax rate to their employees, and thereby boosting a consumption cycle. In India, typically a lower tax rate goes to shareholders, which is a small clutch of people, which impacts beneficially the market, which is 1 or 2% of this country, and not anybody more. Very rarely have we seen a company say, hey, I've got an effectively lower tax rate, I'm passing on the benefit to my workers or my employees, thereby sharing it with a larger community of stakeholders, and therefore benefiting an economy in a larger sense. Don't we need, do we really need corporate investment at a time when there is so much surplus capacity? Are companies really going to put that money to work by building new plants at a time when there's so much surplus capacity, or is it all just going to get funneled into better stock market returns?
See, I think eventually this can be like an ideological debate that you can have, but eventually corporates are geared towards investment. I have seen very few companies whose main job is to give money back to shareholders. Companies are there because they want to grow, they want to invest. There have to be investment opportunities, and in order to spur those animal spirits, in order to spur the risk-taking behavior. And I think we are on the anvil of that.
But Rashesh,
I agree with you. The capacity utilization has been a big issue. But remember, global growth is coming back. Exports are on an uptick. Indian economy is also, consumption cycle has got revived.
And there is no lack
Given
of funding if companies want to put up infrastructure or new capacities at this point in time. Why do you need a tax rate cut for that?
The larger concern that for all capex has always been, it's not the funding of the ability to borrow, but it's been having the equity. So when you cut tax rates, the retained earnings go up. Those retained earnings are available for companies as the equity contribution for the new project, because you have to put equity and then you can borrow. So borrowing is available. I agree with you completely. But companies need to have retained earnings.
Equity is also available.
So
equity is also been. Equity is not available in this marketplace.
So exactly for the same reason, when the animal spirits are unlocked, then the risk capital is available. So ultimately, the equity that you raise from outside or the equity that you have in retained earnings is what is called the risk capital availability for corporates. We need to expand the pool of risk capital that is available so that they can use that and start taking risk. I think we are anyway a couple of quarters away from there, because as I said, the animal spirits are coming back, growth is inching back, the global economy is doing well, all the ingredients are in place. At this stage, giving a small boost, giving a small push, which anyway has been expected because it has been promised over the years, would be very beneficial.
Okay, I mean, I won't argue this further, but I've just got to, I'll say this for you to consider, that between the optics of putting more money into the rural economy in a year ahead of the election and giving large corporations more money, unless they commit to being able to share it with a wider set of stakeholders, I would wonder if governments are more inclined towards the optics, not just the optics, but the beneficial impact of rural and, rural India, which is clearly has suffered the worst hit from demon and some aspects of the informal economy, which are suffering from the impact of GST and all the transitional effects. So I'm just wondering, do large corporations need the hand-holding right now, or is it the small guys that need the hand-holding?
It's an ongoing challenge.
Yeah, I know.
And whenever we frame a question in an either-or, should you give more food to a malnourished kid, or should you give more money to corporates to invest? Then this either-or debate is always going to be.
I understand. Unfortunately, resources make it an either-or.
Yeah,
right?
No, it's not either-or. I think the job of the finance minister is to strike a balance, because we're also talking about jobs. Ultimately, companies invest money, they expand. When they expand, jobs get created. When they create jobs, people will buy houses, they'll buy cars. It will have a spin-off effect.
So you've got to look at what happened in the US, and I was stunned when right after the tax reform bill passed, the first thing companies did was pass that money out. I have never seen this kind of transmission. I've never seen it happen in interest rates in this country when RBI lowers rates and banks take a year to react. I've never seen it with corporate India. Almost always the people that benefit the most, are the small community of stock market investors.
I mean,
and so therefore,
as an aside, I would say,
I'll leave the argument there because I don't want to spend all our time talking about that.
But I must as an aside and as a joke, I think transmission happens by the banks very quickly, but only on the upside.
Yeah, that's what I mean. Right?
So half the transmission happens, the other half doesn't happen. But I think ultimately the economy is interconnected. There are a lot of linkages within the economy, and the answers are more complex. And that's why striking a good balance between corporate investments, giving money for rural investments, rural consumption being spurred on, you have to strike a good balance around it. So I'm not saying give all the money to corporates, but I think corporates need to invest. That is, if not today, a year down the line, because last couple of years, government investment has been driving the economy, consumption has been driving the economy. This is an economy that cannot continue at this pace without the corporate investments coming in. And so we have to think about all the ways we can afford.
Maybe he'll make it a jobs-linked tax rate.
Oh, God.
It's my pet peeve. I'm so sorry, I keep bringing it up. But I'm wondering whether he'll find a way to do a tax rate cut linked to the number of new jobs you create over the next 1 year.
I think it's a fabulous idea. It's a fabulous idea.
Okay, so I'll just say that again, Rashesh, because every time I pitch it to the news.
Why not? It's an offshoot of investment and growth. Why do you need an incentive to create jobs, sir?
The reason is...
You will create jobs when you invest.
The reason is you can make investments.
I was winning for 30 seconds.
The reason is you can make investments which don't create jobs, but are still investments, and you can create investments which can, like for example, textile or housing creates a lot of jobs. But there are other industries which may not create jobs, which are more automated or process industries. I think in India we have celebrated, GDP growth, market cap, FDI, wealth creation. We have, the billionaires list. We don't have the job creators list. So absolutely, we need to start focusing and sending the message out that you make investment, but also make investments in a way that also create jobs. Now, again, it will come back to saying, how do we get the jobs data? How do we do all of that?
Also, it's terribly complex. You're then, leaving out, like you said, consumer companies that may not be very job-oriented companies, more manufacturing. And
you're, skewing
the complexity of it.
You're also skewing the nature. For instance, if the need of the hour is to start moving towards technology and training people to be able to do that technology, you suddenly have this jobs link incentive that isn't the industry getting pushed back.
Additional. But just imagine the optics of it in a year before the election. I will give you a lower tax rate if you create 100,000 new jobs over the next 2 years.
If you see all over the world, I think the central bankers, the prime ministers, presidents of countries always talk about jobs. If you go to the US and a small county and you are creating 80 jobs by putting up the governor of the state comes out there to...
Not just that.
So I think everywhere jobs are clearly, in a very articulated manner, being given a very important place. And I think in India we need to start doing it. How we do that, there are various ways of doing it. But absolutely, I think creating jobs is a
dozen and more states in the United States offer tax credits if you create a number of jobs of more than X%. So if you create more than 1,000 jobs, you will get a certain tax credit.
My point is that there has to be underlying demand for investment to create a capacity or something which then gives jobs. So you come back to the same circle, right? Do you first spur consumption and hence investment and hence jobs, or do you do it the other way around? I'm not sure.
I agree. Maybe the money is better spent in the rural economy, which is really the most stressed part of the economy. But kite flying is the theme of the season this week at least. So
I just have one last question. We're slightly off for time as well. But Rashesh, let's assume that there is room for expenditure to grow because there is a more benign receipts environment in FY19 compared to FY18. What is that one big black ace of spades that he has? Is it divestment, 1 lakh crores, or is it something else?
I think divestment is the biggest ace that the government has. The markets are good. Assets are in demand, including land, because I think, as you know, in India, getting land is it's not very easy. Housing is starting to come back. Affordable housing is a big one, so government can allocate land for affordable housing, which has then spin off other benefits. So I think asset sales, whether divestment as well as sales of land directly, indirectly through government companies, could be one big way where they can raise maybe another 100,000 crores.
And therefore, if divestment is the big one, would it be counterintuitive to get in LTCG at a time when divestment targets are high?
I would call it non-tax revenue, not just the divestment, which is a part of non-tax revenue. So I would say non-tax revenues, if you can increase your non-tax revenues by 1 lakh crores, I think it will make a huge difference because you can do all the spending you want. It will offset the oil price increase headwind that you have. So non-tax revenue is, and exactly for that reason, I think any change in the long-term capital gains or any capital gains is not warranted, because this is, again, ultimately equities investing is also about fostering risk-taking behavior. We need this year for individuals, for companies to take more risk. We need to encourage risk behavior so that people can invest and take risk and grow the economy. So I think tinkering with that at this stage will be counterproductive.
But why can't risk be more than 1 year risk? Why does it have to be 1 year risk?
Timeline.
Why can't it
come
be
back
3
from
year
Davos in full?
No, but really, why can't it be 3 year risk? And prospectively. I agree with you 100%.
I'll be honest with you.
Yeah, if you make any change, make it prospective.
Maybe quite a few people in the stock market or investor community may not be happy with that. But I say between 1 year and 3 year, I don't think eventually it will make any difference. this year you don't want to destabilize anything. You know, we have
So
gone through a lot of changes. So if you can postpone it by a year, it won't make a big difference from the revenue point of view. So this is the kind of thing you are sending a signal, but it will not have any impact from the revenue. It may be a couple of thousand crores is the revenue impact of that. So changing it for making a signal, you can do it after a year. It will not change the financial structure in any material way.
That's true. That's 100% true. I think it's a very small amount, effectively, or we assume or estimate to be a small amount. We don't know anything more. I know we have a couple of more questions. Very quickly, if we can put you, how is this whole NCLT process going in your estimate, Rashesh? Because, you know, I think one of the critical things every corporate is looking at is either being able to consolidate within their industries using the NCLT process, and of course, the deleveraging of banks, you know, not deleveraging, but the uncluttering of bank balance sheets in that sense.
So if you see, you know, the banks have made large part of the provisioning cycle is over. So because this entire NPA cycle starts with provisioning, then you resolve and then you recover. So I think NCLT is for the resolution process and then recovery process. The provisioning part, because of the AQR that RBI did a few years ago, I think the provisioning, we are about another 3-4 quarters away, but the provisioning cycle will be over. So in a way, the mark to market has been done or almost being done. Now the actual resolving it, restructuring, selling assets and recovering has started. I think the NCLT process is going fairly well in India, and actually in all countries. Whenever you have a new law, it will get tested, because however well you draft a law, in real life it will get tested, because there will be, you know, very specific circumstances, very individual characteristics of every deal that will come about. I think that is going through. The NCLT process has run very well. I'm actually very, very positive. It has stuck to the guidelines, it has stuck to the timelines, and it has worked very well. I think we will see the first asset sales happening, because already a few have started happening. We had things like Murli Cement, Binani Cement have got sold. I think all the steel companies are now you know, getting bids. There is a lot of expression of interest from a lot of companies. I would expect between March and April is where the bids will come in and get finalized, and it will take another 3 to 6 months for the closure of that, because you know, you have to get all the government approvals, competition commission, all of that. So I would say before the calendar year 18 is over, at least about 20-25% of the NPA cases would have been resolved.
Linked to that, Rashesh, I mean, so now that the cycle is fully in place, etc., we've had the recap, etc., without getting into deep debate on it, is it time to signal banking reform as well? And what they announced 2 days back was not reform.
Absolutely. I think actually banking reform needs a much broader conversation. There have been reports, you know, there is a PJ Nayak committee report, and there have been a lot of other reports. There is already Indradhanush reforms were there. I think there are governance reforms, there are management reforms, but there are also structural reforms, including, you know, digital and all of that, because I think we need a much larger reform approach to banking. And I would also say actually we have gone beyond banking. India, now we need financial sector reforms, not banking reforms. Because I think all this is interconnected: insurance companies, mutual fund, capital market, bond market, banks. And as I think quite a few people have been saying, we are moving away from a bank-centric financial services structure to a financial sector where banks play a role, but NBFCs, housing finance companies, ARCs will also play a role. So I think what we need is a very global blueprint on reforms for the financial sector, which develops the bond market, develops project financing, all of that. And because in part we have had, you know, PJ Nayak committee report, which is a fabulous report, but that's only about governance in banking, which is a part, which is a subset. But I think if we take this opportunity and go back to the drawing board, we should set up what I call financial sector reforms and see how this is interconnected, how much money, household money we want to divert towards insurance, how much towards capital market, and have a very global game plan on that, and then implement reforms accordingly.
Yeah, and there cannot be a more opportune time to do that than now, when the trend towards financialization is so sort of, you know, emphatic. Thank you, Rashesh, for joining us this morning. Thanks for a very well-rounded conversation going into budget week. So Rashesh Shah there, the head of FICCI, and of course the Edelweiss Group, talking us through what he expects will happen over the economic survey and the budget.